Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at here is a chart of the market, E-mini S&P 500 futures contract, and we're looking at a last print of 764 on this Friday, the 20th day of February. 2009. Been about a month since the inauguration of Barack Obama. Been about a month of drawdowns as a result for our portfolios. We'll look at that in a second, but first we're going to look at the intraday dynamics, or our proprietary indicators, and what they're telling us the market is likely to do. Today is Friday, Thursday, Wednesday, Tuesday, just simply flatlining was Thursday, Wednesday, and Tuesday. After the break to the downside on Tuesday, we did mention last Friday that the market really wasn't likely to make any headway. We had these indicators going in the opposite direction, primary and secondary, and we did certainly have these chopping around as well. We did get the move to the downside late in the day, but had a blast to the upside right into the close of the Friday session. But as mentioned, we really didn't have a unanimous opinion on the market, at least based on our indicators, suggesting that this move was likely not to stick. We did try to break above the move on Monday, around 830 to 840 in the S&Ps. Batted up against the high of the prior day. Also the high of Thursday looks like, at least late session on Thursday. This was Monday, putting in a double top there and just a lower high there, and a close subsequently below the trend, near the actually at the low of the day, and suggestive of a continuation move on the day following, which was Tuesday. And what do we see here? Just a fully bearish. The bears continued to rule the roost and control the market environment. We did have a bit of a divergence here, but just fully bearish. Accelerating bearishness here and accelerating bearishness there, really suggesting the market had no upside potential, but interestingly it had not much downside potential as well, as the market did baseline for about 3 days. That was of course as a result of the daily chart. But actually I believe this was the move that we switched back from our official market timing from bullish, which we went out on kind of a whim. We went out on a ledge, paid the price. We had just booked about 500 S&P points in profit on a discretionary basis. Guess we were playing with the house's money, just thought we'd take advantage of the extreme. It just wasn't going to happen. And as we had one of our clients mention a couple of weeks ago that we would be likely to see 760 in the next week, he was right. We didn't actually see it that week, but of course we're at 760 right now in the market. The direction we didn't want to go, but so we are officially neutral, and we're on the. We'll look at that chart in a second on the daily. But as you can see, the market continued to baseline midweek. We did have some interesting bullishness on this day, but it just wasn't to be, as everything else remained predominantly bearish. Here on Friday, bears continue to control accelerating bearishness, just full bearishness, below the low of the prior day, below the low of the prior 3 days, essentially. Lower high here. The bears do continue to control the market environment. Why is that? Why are the bears controlling the market? Well, we're going to look at the chart of the daily right here, and we'll go ahead and minimize that, and you can see, I'll just move that up right there, and as you can see, the market broke below. We'll go ahead and zoom in on this right here. Broke below the key 790 level. We mentioned if we got below 790, we would make a switch back. The close was 789.17. Generally, we like two closes, so you could either call it this close 788.42, another 10 points lower. But given the rollover move under the pressure of the trend, short-term in nature, definitely wanted to make a switch there on our official market timing, which now remains neutral. But as you can see, why did the bears control? Well, as they have for this basing period, bearish, 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 and bearish. From a trend following perspective, we are fully bearish. For our intents and purposes, have remained fully bearish. We did, as we mentioned, jump in on the bullish side a little too early from a discretionary basis because of all our indicators continued to suggest bearishness. We are short-term bearish amidst an intermediate-term bearish scenario here. Short-term bearish from a directional movement perspective amidst an intermediate-term bearishness here. ATR is just simply flat and going nowhere. We do expect that to pick up. As you can see from a price technical perspective, we are below this key level here around 800, but we gave it to about 790. But as you can see, we are headed to retest the lows of November 20th, 747.78, and then 741. 43 was the next low, so we'll look around 740 for a little bit of a bounce, but we won't get back onto the bullish side until we see evidence of such a move. So we're going to go ahead and switch over to look at some interesting things that have developed. Generally, we have a lot of clients who always want us to inform them of when we have a drawdown in our portfolio. Again, as mentioned since the inauguration, 21st was our equity high in most of our portfolios, futures portfolios that is. We've since had a recent drawdown. If you look at the MAPDT on the 21st of January, it was showing a profit of $18,905 on a $20,000 account, so it was sitting at $38,905 on a $28,000 or a $20,000 account. Where is it now? 29 days, so a month later, as of yesterday, the portfolio sits down $6,601 or 33% on a $20,000 account. Of course, this 20,000 number, you could trade it with 40,000. It'll trade the same number of contracts, just wherever your risk profile stands. But you could trade it with 40, 50. You could even trade it with 100 if you wanted to mitigate your upside and downside potential of the portfolio. But what does this mean? We're down 6,600 in the MAPDT. As you can see, these are original portfolios, so they're very aggressive. The MAP Black is the original, down 45%. But the MAPDT was up 100%, and now it's down 30%. So what does that mean? Well, essentially, we went back and looked at the MAPDT original. This is retrospective of a lot of our portfolios, representative, I should say, of a lot of our portfolios, but this is kind of an extreme example, and certainly one that jumps out on the page. So we were down in early 08, this portfolio experienced a drawdown of 27,233, more than the risk capital, so you would have had to refund or start off with a higher capital number, but the aggressive figure is 20,000. But that was an extreme drawdown. I believe it ended in March of last year. It started in, I believe, January, so very similar scenario compared to where we are right now in the MAPDT original, as you just saw. But the maximum drawdown then was 27,233. Where are we now? Well, you just saw 25,515. If you take the gains of 18,905, take those away, add in $6,600 in gains, you get $2,515 in drawdown. So our numbers won't be released until next month for the next quarter, for the fiscal quarter, but as you can see, they will show this extreme drawdown. Now, what does that mean? Well, this is a great opportunity to get involved with a portfolio. Obviously, where do you want to be buying? Do you want to be buying right here? Do you want to be buying at this equity extreme high right here, or even right here? You're still going to lose money, and you're going to have to endure, this is a nice profit, but you're going to have to endure these losses. So emotionally, where do you want to be buying? Emotionally, honestly, most people don't want to be buying after a string of losers. But emotionally, do you want to have to endure this, or do you want to have to endure this? Equity appreciation, So just wanted to point out a great opportunity to start many of our portfolios and to take advantage of the recent drawdowns that we've had to our equity. So if you guys are interested in any of these portfolios, particularly the MAPDT, you can go to the website and click on, we'll call it MAPDT version 3.0. So go ahead and click on that. So any of our MAPDT portfolios, the original 2.0, 3.0, 4.0, go ahead and add to cart. Actually, I'm not sure 4.0 is available. Go ahead and enter promo code VIDEO, and this is going to be to kind of help you guys along your decision-making process. Well, that looks like a great buying opportunity for the portfolio. Just don't know. Well, there's a promo code VIDEO. I'll save $500 on any MAPDT. That sounds like a good deal. So, if you guys have any questions, chat with the support team live at the website or shoot us an email to admin@MiniAnalyst.com. And we hope you're having a great week, and we'll see you next time.